Hey, what's going on, everybody? Welcome back to the Wealthy Legacy Journey. I'm your host, and today we're going to be talking scared money, smart moves, and about taking initiative, investing boldly, and leading with vision. Now, we're going to start off today's episode with a personal lesson that I learned this past week that actually came about from selling my minivan. So, as you guys know, over the last few weeks, we've bought Libby a new minivan. We had an old minivan. A couple weeks ago, I was actually talking about a potential partnership that we were going to go into in order to sell that minivan. And then the thoughts were, okay, well, then we'll take that money that we earned from the minivan, reinvest it back into that partnership, and let that money continue to be flipped over and over and over. But now you hear me saying, well, we sold the minivan. And when I say we, I mean Libby and I. We actually went and we cleaned the minivan. We took pictures of the minivan. We posted the minivan. We met with buyers for the minivan and we sold the minivan. So what happened to that JV opportunity? And this is going to be the lesson that we're learning today is the importance of taking initiative. You see, the guy that I was going to partner with, he missed out on quick cash. He missed out on a long-term partnership because he wasn't taking initiative and he wasn't communicating. So we had originally reached out, hey, we were going to meet like on Friday and he was going to pick up the van and didn't hear anything from him. Finally, we messaged late that night. Something came up. He asked if he could pick it up. I think it was going to be Sunday. So then we go through Saturday, didn't hear from him. Then we go through Sunday. He was supposed to pick it up like late that night, or he was going to be like 8 o'clock, or I think it was going to be like 6 o'clock, and then it became like 8 o'clock, and then it became like, hey, I'll come pick it up like 10:30. Libby and I are early birds. It's getting pretty late for us, and we're like, you know what? No, don't worry about it. We'll just come pick it up on Monday. Cool. So then Monday he said, I'm going to come pick it up around 9:30. So I was like, that's pretty late for me. I'm going to leave the key here, like on the wheel well, lock the car. You can come pick it up, from my house because he's somebody that I know very well. He's a family friend. And, take it and do whatever you got to do with it, get it cleaned up, post it out, whatever. So then to my surprise, I wake up on Tuesday, if I remember how all this was playing out correctly, something like this. Wake up on Tuesday, and I was like, oh, that's weird. The van's still there. And I don't have any sort of text telling me that something was going to change. So I reached back out. Hey, are you too busy for this? Oh, no. He called me. He's like, I could really use this, this, that, and the other. Cool. No problem. Just come pick it up this evening. We'll kind of do the same thing. So another day goes by. And again, no text, no communication, no, communicating whatsoever what's going on. So finally, on Wednesday, just had to say, hey, I tell you what, just so you know, we're going to go ahead and clean it. We're going to go ahead and list it. I appreciate it. Seems like you're really busy, and that's fantastic, which I don't know what if he was busy with work stuff or if he was busy with other personal matters. He never communicated with me, right? Communication is so important, and so is being Johnny on the spot whenever opportunities come your way. I know I've experienced that, right? The opportunities that I jump on, those doors, they're open and I can go through them, whereas the doors that I hesitate, oftentimes they close, right? So then Libby and I, Friday on our date night, we cleaned up the van, went to a car wash, got it all prettied up, posted the van on Saturday morning. Sunday, I was having conversations with people. Into Monday morning, I had a real serious buyer on the line. Ended up coming out Monday evening, and he sold it right then and there. What was interesting though is the agreement that had been made was anything above, basically it was like $22,280, $2,300. Anything above that, we were going to split 50-50. And the goal was to sell the van for $2,500 to $3,000, maybe a little bit more. Well, after reviewing some of the comps myself, I thought, actually, I think that our car is really nice. It's in good condition, looks really pretty. The photos turned out great. I think we can sell this bad boy for maybe $4,000. So we listed it. Actually, I'll admit I was a little aggressive. I first listed it for 4,900, got absolutely no traction on it. So then I backed it off to 3,900. But it was cool because there was then obviously that price drop. Had several people reach out within like 24-hour period of dropping it. I had like 13 different people reach out and then ended up selling it for 3,500. Now we sold it for 3,500 to a missionary family. They actually ended up offering 3,600, and I already felt at peace with 3,500. They were a missionary family and we connected a lot on that front. And I just thought, you know what? I probably could have haggled with that guy and got him to 3,750, maybe even the full 3,900, because he even admitted that it was already priced at a really good deal. But then he obviously brought up some things. But with 13 other buyers there, I know I could have gotten that deal pushed through. But to me, I just felt this on my heart. It was like, okay, I want to give these guys a little bit of a break. I had already felt at peace with 3,500. I'm just going to go with 3,500. So actually, they said 36, and I was like, how about 35? We took 36 at first, and then actually gave them $100 back. And I was like, I don't want to take any more than 3,500. But the important lesson learned there is you have to take initiative. So when those big opportunities come your way in life, and they will if you continue to plant the right seeds, when they come, you have to jump. That's an important lesson. Don't forget it. On a real estate note, with the brokerage, I'm very excited because Nathan and I had a really great conversation. He actually met up with one of his previous mentors this past week, and he came away from that conversation with just a whole different perspective around some of the things that we were doing here at Ambition X Real Estate. Made me really excited because we really decided we're going to engage on the results and creating results with this team that we now have formed versus thinking so far into the future. I think it's amazing. We've got a 1-year plan, a 5-year plan, 2-year plan, 3-year plan, 4, 5-year plan, a 7-year plan, 8, 10-year. We've got this long vision here. But then I wanted to back it up and really focus on today. So now we're equally yoked in that concept, and I can already see that this is going really well now that we're kind of on that front together. So that was really good. I'm really excited about that, cohesion there of the vision for what we need to focus on right now. I'm also very excited. Last week, I talked about how we lost Billy Sahutsky as a leader. Man, that was so hard. Like, I remember when I got that first text, and it was like, oh, I thought I was going to be free of this. I thought that somebody else was going to be able to take care of this for me, and I was going to be able to move forward and move on, and I had to come back. But I will say I've actually had a lot of fun in the sales role. The cold calls, there's still cold calls, but I've had a lot of fun, getting to connect, we're already getting our conversion rates up from where they were a few weeks ago. We're getting our speed to lead way down from where they were a few weeks ago. We've gone from, a whole day that it's taking us to get back to leads to we had a day this past week where our average speed to lead was 18 minutes. So that was a huge win that day. Most of the days have been like 3 hours. But one day was super solid. And it was because I was on the phones. I was calling every single time. It was a day where I had some free time and bandwidth. But I'm also excited to say on that front that both for, Scott Jones' purchase team and my leads team, we are putting together kind of a core group, right, of 2 to 3 individuals that are from the brokerage, right, that we're really going to invest into. And our number one goal is how can we get this small group of individuals to $10,000 a month or more? That's the milestone. That's the record to break. So that's where all of our focus, our time, our energy, and attention is going. Scott on his purchase side, me on the lead side, us focusing in on the core team. Again, going back to the conversation that Nathan and I had about focusing on the results of the team. Now the team has been built, the frameworks have been built, the tools have been built, the process has been built. Now we have to utilize all those to produce real results. So another thing, and this is kind of on a real estate side, this is switching to like my investments on the real estate side, tax lots. I haven't talked about tax lots in a minute, but I've got some over in Upshur County that I'm looking at as a maybe. When I first saw them, I thought, man, shoot dog, these look like some good lots that I'd like to get my hands on and purchase. Took a deep dive look at them today, and they weren't quite as beautiful as I thought they were at first glance, but I still think that there might be something there. I'm not sure if we'll just have to see. When the day comes, if I can go do it, I think it would be cool to get back into tax lots. Originally, when I first saw them, I thought, oh man, this could probably take, a good $20,000-$30,000 of my capital, really put it to work on the real estate side. That's why I was really excited because there was a couple lots and I thought between all of them, 20, 30, maybe even 40 grand, that would be fantastic. After taking a deep dive, I realized between the two of them, if I even bought them, I would probably be all in like right about 10 grand on both of them. And they'd probably be worth somewhere around 20, about 10,000 each. So I'd probably put about one I'd put about 6,000 into. It's worth about 12, 15. The other one I'd be willing to put in about 4 and it's worth about 10. But you also have like surveys and, title fees and all that kind of stuff, closing costs. And so I try to get roughly double my money on something like that. So I'm not as excited about those tax lots now, but it is cool because I feel like I'm starting to come above the water, like get my head above the waves of all what we've been building on the brokerage and be able to think about investing again. So that's exciting. On the stock side, we made the $3,500 from selling the van. We tithed our $350 from that. And then we took $3,150 and agreed we're going to immediately go ahead and put that into high yielding dividend investments. And so it's been really interesting. I've been really trying to study and learn kind of the dynamic behind a high yield dividend investment like that. Basically they're really strong whenever the market's trending, sideways. Because they have this, they call it NAV decay. It's just basically like a value decay of the underlying, what are they called? ETF. So the price of the ETF, so maybe like it's worth, 20 whenever it first comes out, and it slowly just goes down over time because of the massive dividends that these high yield ETFs pay back out. So I'm currently invested into TSLY, CONY. So TSLY, the underlying asset that they're trading, it's basically they're trading they're trading options on it, and like covered calls, do calls and stuff like that. Selling covered calls and things of that nature. And so they're making all of this, income off of the options, and then they're paying those out as dividends. So CONY, the underlying asset that they're trading options on, is Coin. They're the big uh, cryptocurrency exchange, and the crypto wallets and things of that nature. TSLY, the underlying asset there, is Tesla, the car manufacturer. And then also we still have BITO. I reduced our holdings in BITO, so that way we have a evenly spread holdings over all three of those. So we had about $4,000, give or take, maybe $4,500 of BITO. We now have about $7,500 each, because we had about $4,500 in BITO, plus we added in this other $3,150. So we were right about $7,500 total. So we distributed that $7,500 across all three: CONY, TSLY, and then, like I said, BITO, which the underlying asset on that is Bitcoin. So it's, I'm really excited. I think overall we'll probably have about a 40% annual ROI on that investment, which is really cool. Off of that $7,500, you're looking at annually maybe about $3,000 that we could earn. This is a new thing for me. But when we were buying our minivan, it was funny because I was talking with the guy who owned the car dealer that we were, bought the van from. And one thing that he said stuck out to me. I've heard it before, but I haven't heard in a little bit. He said, "Scared money don't make money." Wow, that's good. Yeah, that's so true. How many times do I allow my analysis paralysis to get out in front of me being able to make a good decision and hold me back from a decision that I really should make? Going back to the very first lesson that we learned, right, about taking initiative. So I wasn't going to let that happen here. I am going to monitor the investments and watch it closely, but I also really, as I dove into the metrics and the data and the math behind how these work, I gave myself a pretty good understanding for, okay, this is the risk that I'm taking. Also mentally coming to the place of going, I'm willing to lose, 100% of that money as I am learning and experimenting on this one. But obviously that's not the goal. And so the goal is to be able to see a return, but also just monitor it closely and keep in mind, okay, we're getting this high yield dividend. But then on the other side, we do have to take into consideration that we are, having value decay over time. So how do we balance those two out? Because if there was no value decay, essentially we'd be making like 150% a year. Right? But we have this 150% a year dividend that we're making, but we have such huge value decay that we end up with, like I said, about a 30 to 40% ROI on the investment. One of the last things, our high yield is almost fully funded. We're at least one step closer. So last week I said, hey, we put in $100. That cleared. So this week we're doing another little bit bigger chunk, $6,900. Just getting used to like a new bank and all that kind of stuff. Maybe I'm just being like overly, cautious, but I just want to make sure that everything goes good. Then we'll move over the remaining amount, that 56,000. Again, that'll yield us about $2,240 annually. But if you look at the two of those, right, our high yield savings is going to make about $2,240 annually. The high yield ETFs, those are going to end up yielding after value decay and then the dividends about $3,000 a year after that capital erosion. So now we're at 5,240, and then we also cash flow per year, just off of my salary. About right now, we're sitting about somewhere in the ballpark about $200 a month on average. Plus, every couple months, whatever it's a 5 week month, I get a little bit extra because we pay ourselves every single week, and so that is another, like, we just consider that as money, like, doesn't even count. Those months get really tight, especially from a groceries perspective. That's basically another 1,200 bucks. You're looking at 12, 24, $4,800 plus another $200 across all 12 months. So you're looking at about $2,000, $2,400 there. So 48 plus $2,400 is 52, $7,200. So $7,200 on top of this, $5,200. We'll just do easy math. 5 plus 7, somewhere around $12,000 of cash flow per year that we're now creating. So we're in the 5 figures of cash flow bracket, which is so cool. Not that long ago, we were just on the, 0 to 5 figures, 5 to 6 figure. Now we're on our 6 to 7 figure journey, and we're generating $5,000 a year in some type of free cash flow that we're going to turn around and continue to invest. That's a very exciting prospect. So with that being said, one of the last notes that I want to say here is don't forget in 2025 to pay yourself. And I'm just going to continue saying it over and over and over, because if you're not paying yourself first, meaning knowing what you're going to cash flow and then what you're going to put it back into, even if you're just dropping in the S&P 500, right? If you're not paying yourself first, you're not going to be able to get ahead, right? You've got to invest. You've got to grow your assets. You've got to grow your wealth. So maybe it's, if you're starting up a business, maybe you're investing into skills, maybe you're investing into training, into courses, maybe you're investing into how do I advertise, or once you understand how to advertise, maybe you're just investing into an ad spend, an ad budget, right? Whatever those different things might be, what is it that you're reinvesting back into? So for me, I'm reinvested back into the market. I've got S&P 500 holding. It's not S&P, it's actually oh man, now right as I said, SPLG, which basically tracks the S&P 500. So essentially, we got S&P 500 holdings. We got these high yield dividend holdings. We've got cash flow coming out from our high yield saving, or higher yield savings account. With the money that's sitting there, we've got cash flow coming off of my paycheck, all those different places, and then we're turning on reinvesting it. We might buy some tax lots, right? We might invest back into some real estate stuff. Also, as I've told you guys, I'm going to be investing into something I was researching this last week, into a VA, to help me make these episodes better, start creating shorts, help me to start organically, spreading the news of what it is we're doing here and how we're educating people, how we're helping people to make those right kinds of decisions. So I've got lots of things happening on my investment front. My question I would leave you with from today's episode is, what is the number one thing you're doing on your personal front to grow your wealth? Is it learning how to just create cash flow? Do you now have sustainable cash flow and you need to learn how to, put that into investments instead of just dropping it into a savings account? I've been there, right? Is it maybe you were cash flowing at one point and you've gotten a little bit lazy about it? You started spending a little bit more. You need to rein it back in to start getting better about it again. Been there too, right? I've been there. What is that number one thing? Write it down. Make that a focus point for this week. Let's close out our episode today with our identity mantra before we get out of here, guys. I'm going to say it first. You guys say it after me. I explore the unknown. I conquer new frontiers. My journey is powerful, and my wake is a wealthy legacy. Awesome, guys. And just as a reminder, the way we define wealth here at the Wealthy Legacy Journey is simply the ability, you hear what I said? Simply the ability to cover your monthly expenses without having to lift a finger. That's huge. That's exactly where I'm going with on this cash flow thing. You stick with me for a couple more years, and I guarantee you that I will be to that place, because those are the seeds that I'm planting. Speaking of seeds that we plant, the way we find legacy here is leaving a long-lasting impact on others who come after you as they receive the fruit of your labor, whether that fruit be good or bad. Remember, guys, everything we do plants seeds. The time we spend on different projects and tasks and thought things, right? That's cultivating the trees as they grow from seeds into plants into trees. And and eventually those trees will bear fruit. So I want you to think about, what are the seeds that I'm planting? What are the trees that I'm cultivating? Where am I spending my time? And are those really going to yield the fruit that I want? If the answer is yes, keep going, even when it's hard. If the answer is no, then it's time to pivot and start doing some of the right things. Alrighty, guys. Well, if you enjoyed today's episode, please like, please subscribe. It really helps the algorithm. Don't forget, in the description, we've got some helpful tools and resources, so go check those out. With all that said, guys, this has been another episode dedicated to you and your own personal wealthy legacy journey. Go out there, simply take the right next step today, and I cannot wait to hear y'all's success stories. See you guys around.